Stocks are back in rally mode, but for how long? In today's cover story, traders get a clear picture of the state of the housing sector this week. Plus, what lies beneath the escalating conflict in Ferguson, Missouri, and baby steps to a better family budget. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Tuesday, August 19th. In today's first look, a rip-roaring rally. The Dow raced up 176 points, the NASDAQ 43, and the S&P 17. Gold was dinged $6 and oil slid 81 cents. Optimistic news views on Russia and Iraq are improving market sentiment as tensions ease between Russia and Ukraine, and President Obama says a major step forward has been made in Iraq. Among stocks to watch, Urban Outfitters and Aeropostale. Urban declined 2% after the bell last night after trumping earnings estimates, but the retailer reported lower margins. Aeropostale made an 8% leap on word it is rehiring its CEO. But wait, there is more. Skilled Healthcare soared 38% on merger plans with Genesis Healthcare, and Rackspace racked up 2% on a report Blue Harbor Group has taken a 6.5% stake in the company. Well, that's the sound of our bell to start the trading day. Joining us for a look at the market, Scott Shellady of TJM Investments joins us now. And Scott, how much of this market momentum or movement we've seen lately hinges on what's happening in Russia?
You can see the equity swings on whether we've got tensions or easing of tensions. Russia's the linchpin. Putin's going to do what he wants. Sanctions mean nothing. And if he does what he wants, I think that's going to hurt Europe, and ultimately it will hurt us here. The consumer's having a difficult time, so there's a lot of big headwinds, and Russia's the biggest one.
What about the economic data coming into the market about the U.S., especially with the housing data? How do you view what's coming in this week?
It's got to be more consistent. You know, the best way to trade this market is to have the best memory is no memory, because knowledge gets you punished. Knowledge is not power. So have no memory and go with the flow, because we have to see some consistent flows. And right now we're getting good, bad, good, bad. The economy is not giving us a good read at all. Be careful.
Scott, great to have you on this morning. Thank you.
All righty.
Chuck Coppola joins me now. Good morning, Chuck.
Angie, Russia's retaliation is not over yet. A Russian news outlet is reporting that the nation may expand its retaliation to include imports on cars. That's if the West imposes further sanctions in response to Russia's handling of the crisis in Ukraine. Currently, Russia has banned imports on certain foods from the West, including crops from Europe. The EU plans to pay farmers to destroy or give away crops in an effort to control prices. Meanwhile, officials say they will set aside 125 million euros to compensate farmers who have been impacted by the crop ban.
Well, traders and portfolio managers are closely watching stocks that could move on agriculture action coming out of Russia. Joining us now with one strategy is Donald Dale of Derivagard. Good morning, and what is your play?
The play is with MOO, the agribusiness ETF, MOO. We believe that the pending sanctions on Russia coming out of Europe could have an impact with respect to the agribusiness sector globally. And in particular, we think the volatility with MOO in the November cycle is very appealing at 11 to 12. So we like buying the at-the-money straddle, the 54 November straddle, for around $2.50 to capture any pending further damage associated with the possible sanctions elevating.
That MOO ETF also offers a yield, does it not?
It does indeed, and if you were to move to the November cycle, you pick up the majority of the constituents' earnings that are staggered from October through early November as well. And the majority of these names are household names: ADM, Caterpillar, John Deere, and Potash.
Good to have you on the show this morning. Thank you.
Thank you.
Farmers are up to their ears in corn. Weak demand and a bumper crop harvest are creating a grain glut, driving down corn prices by 13% this year to nearly 4-year lows. The U.S. Department of Agriculture has predicted that production will exceed 14 billion bushels, topping a record set just last year. Consumers could benefit with slightly lower prices at the grocery store.
The president is taking action on the intense situation in Ferguson, Missouri. He's sending Attorney General Eric Holder to the embattled area tomorrow to monitor tensions between protesters and police. Those protests continue 11 days after police shot and killed 18-year-old unarmed Michael Brown. The volatile social situation overshadows a fragile economic status.
Until all this happened, my impression of Ferguson was a place that was genuinely trying hard to turn things around. Their downtown they have an old downtown district. It's very charming. There's clearly some investment going on there. And while the housing bust did cause a major problem to that, there's very clearly been a lot of effort put in to try and rejuvenate that neighborhood.
Dr. William H. Rogers from the University of Missouri St. Louis is researching how the lack of transportation from the suburb of Ferguson to the city hinders access to jobs. Wall Street has been fast to react to the Ferguson melee. Shares of Taser are up roughly 25% since Michael Brown was killed. The company makes stun guns and wearable video cameras used by police.
A new problem is surfacing for troubled grocery chain Market Basket. Employees have been protesting since July over the removal of the CEO, and now the Boston Globe reports that a major vendor is canceling business with the retailer. The head of Boston Sword and Tuna says payments from the new co-CEOs have been erratic, falling behind for 2 weeks, then followed by a $400,000 overpayment. A Market Basket spokesperson responds that its leadership is working with Boston Sword and Tuna.
One of the largest firms trading stocks on the NASDAQ is facing charges. The Financial Industry Regulatory Authority, also known as FINRA, claims Wedbush Securities is in violation of rules and accuses the brokerage of having shoddy risk controls that could open the way for money laundering. It allegedly happened between January 2008 and August 2013. We are still awaiting a response from the firm.
Just as individual investors are backing away from junk bonds, big-time investors are jumping in. That's according to fund tracker Lipper, which says institutional investors recently snapped up $680 million worth of high-yield, low-rated corporate bonds. In previous weeks, smaller investors pulled a record $1.7 billion from junk bonds, mostly out of fear of a sudden market collapse. Bigger players seized on the opportunity to buy after others decided to sell.
An alarming number of Americans are not saving enough for retirement. 36% of respondents to a Bankrate.com survey say they have put nothing away, and many who are saving are not socking enough away. 60% of workers have saved less than $25,000. Greg McBride at Bankrate.com finds workers put off saving unless it's automatic.
One of the things that's really helped in recent years is automatic enrollment into 401k plans, where people actually have to take action if they don't want to be in the 401k. Well, without access to a workplace retirement savings plan, too many people have to take action to open up something like an IRA, and of course they don't take that action.
There are a couple of bright spots in the new data. More than 20% of respondents say they started saving in their 20s, and 10% started in their teens. Great job.
Dollar store stocks are big money on Wall Street this week. Dollar General is launching a bid for Family Dollar, offering $78.50 per share for the chain. Last month, Dollar Tree offered $74.50 per share to buy Family Dollar. Yesterday, shares of Dollar General rose 11% in trading. Family Dollar was up 4%, while Dollar Tree fell 2%. A mega merger could put pressure on Walmart.
Walmart is bringing back a more human touch this holiday season. The Wall Street Journal reports the nation's largest retailer will have an employee at every cash register from the day after Thanksgiving through peak shopping days into Christmas. It's called Checkout Promise. One of the more popular customer complaints at Walmart stores is having to wait long lines. Sales at Walmart have fallen 7 straight quarters.
Target takes aim at sales growth by staying open later. At more than half of the nation's outlets, doors will remain open until midnight. Typically, stores had closed at 10 p.m. Target has been struggling to regain consumers' confidence in the wake of the huge data breach that hit the chain late last year. Target reports earnings on Wednesday.
Procter & Gamble is said to be considering selling some of its underperforming brands. A report says P&G is working with Goldman Sachs advisors. Duracell batteries and Braun razors are 2 of the company's largest assets, and sources say are high on the list of brands on the chopping block. P&G reportedly wants to revive growth and cut costs. There's no word from the company.
China does not spare Mercedes-Benz over charges that the automaker overcharged for spare parts. Chinese regulators say that the luxury car maker engaged in price fixing of replacement parts. The report says that purchasing the parts to make one Mercedes C-Class car would cost as much as buying 12 new vehicles. Regulators could fine the automaker as much as 10% of its prior year's China sales total. Parent company Daimler had no comment beyond that it was cooperating with authorities.
The upcoming wave of wearable tech devices is set to explode in 2014. Global market analysis company CCS Insight predicts growth of 129% as new devices hit the market soon from Apple, Samsung, and Google. Still, analysts caution that wearables might not be the game changer that many people expect because wearables don't really offer enough of a difference from smartphones. On the economic calendar for today, it's a look at consumer inflation with that CPI number coming out for July. Also, housing starts and building permits. On the earnings calendar, big day for retail. Lazy Boy, Elizabeth Arden, Medtronic, Home Depot, Dick's Sporting Goods, and TJX Companies. Still to come, our retail stock so over. That's on Tap and Chart Talk. Plus, how parents can prepare for the unexpected when it comes to raising children. And traders welcome a flood of housing data this week. What you need to know is right around the corner. Critical week for economic data about the housing sector, and already home building stocks are hammering out gains. The Spider S&P Homebuilders Exchange Traded Fund rose almost 2% yesterday. That's after the National Association of Homebuilders reported sentiment of homebuilders rose in August to 55. That is the highest level since January. It was also the third gain in a row and exceeded analyst estimates by 2 points. Among individual gainers, Toll Brothers edged up nearly 2%, while Beazer carved out a 4% rise.
In today's cover story, there are other indicators giving those in the housing industry reasons for thumbs up. It didn't take long for more housing stocks to follow suit. In addition to the National Association of Home Builders Wells Fargo Housing Market Index rising for the third straight month, the Philadelphia Stock Exchange Housing Sector Index of 20 construction-related companies rose 1.5%.
The affordability index, it's still great, but we also have homeowners, 25% still underwater. So again, it's demand and supply. We're not seeing a lot of supply just yet. Summer has been a little slow. Labor Day is coming. I think after Labor Day, the doors come off the bus.
The gainers included two of the nation's largest home builders. D.R. Horton up 1.4% to 2113 at the close, and Pulte Group up 2.8% to close at 1878. Other gainers include companies that support home building.
If you look at Lowe's and Home Depot, they're up 2% year to date. So they still have a lot more upside. Home Depot is already broken out. It's traded between 74 and 82. It broke out August 8th. Now that target's moved to 90, which is about 7% higher. I think there's more upside in Lowe's. Lowe's has been trading between 44 and 52 for a year. That target's $60, which is 20% higher. So I think there's more opportunity in Lowe's, but I like the overall trend and the breakouts that we're getting here.
At the National Association of Realtors Leadership Summit in Chicago, the optimism was tempered by a shortage of craftspeople and home lots closer to cities. Still, with interest rates at the lowest levels of the year, James Imhoff, who heads Wisconsin's largest real estate firm, is hopeful that the industry will have time to catch up.
The interest rates are not going to change significantly for 5 years. And I think this is a 5-year recovery. From here on up, it will continue to inch its way back over the next 5 years until we get to that point where we're filling the demand.
Today, the number of housing starts will show how many residential buildings began construction in July. June's was particularly low. And Thursday, the number of existing homes sold in July will be out.
Coming up, a money manager sees a future of shopping in the stock he says is a buy. And after the break, as having a family becomes more expensive, tips on how to bring a baby without breaking the bank.
A bundle of joy requires a bundle of cash. It now costs nearly $250,000 or more to raise a child to the age of 18. That's according to newly released estimates from the U.S. Department of Agriculture. The amount is up 2%, or about $4,200 from last year. High-income families in the urban Northeast will spend 2/3 more than their rural counterparts bringing a baby. The estimates do not include the cost of a college education or inflation adjustments.
August tends to be a big month for newborns. Joining us on set this morning, Marty Neville from Consumer Estate Services with tips on budgeting for bundles of joy. Good morning.
Thanks for having me back.
How should parents budget for baby?
Well, have a baby budget. You know, the costs of having a baby are rising dramatically, and you want to make sure that from the time they're born, you have everything you need and you have the money to do it with. So you should start planning prior to the babies being born.
So set up a budget that includes what? Clothing,
clothes, baby clothes,
rings.
furniture, formula, diapers, everything they need because they're going to grow fast.
Next on your list, you say it's important to figure out childcare, and this is a big issue because sometimes it may be less for the mom or dad to stay home than actually paying for some sort of sitter situation.
Correct. We've got to make sure that if you have a two-income family, sometimes it might be best to have that one-income family and have the mom stay home or the dad stay home and take care of Junior because of the expense of having the child care. Those that have single families, that makes it a little bit harder. They have to go to work.
So you just crunch the numbers and figure
Right,
that out.
exactly.
And finally, a baby cushion.
Well, you got to have an emergency fund. You want to make sure you have enough money. There's always contingencies. Don't forget, every time you go to the pediatrician's office, there's going to be some kind of an expense for an immunization or a shot or regular checkup. And you want to make sure you have that cushion because life is unpredictable with an infant in the house.
Where's that money going to come from?
You put that money in a jar. You know, I take my pocket change every night. I put my extra pocket change in the jar. And before you know it, you got jars full of cash laying around.
That's a great idea. Thanks for coming on the show today.
Thanks for having me again.
Still ahead, retail rumble. Why one money manager is putting his trust in e-tail. Chart Talk is next. Investors may want to be a little choosy when shopping for some retail stocks. Joining us now is Matt Shapiro. He's president of MWS Capital. Good to have you on the show as always, Matt.
Thanks a lot, Angie.
So I took a look at Target stock. It is struggling here. It's down for the year. Would this be a buy at the lower levels, or would you just stay away from the stock?
You know, I have to go to Target to get a couple things, but it's really not my favorite pick. You know, a lot of the big box stores, and you know, Target being one of them, Walmart, you know, there's kind of a little bit of a shifting sands. And remember last year, Angie, retailing was so hot, and now retailing's kind of in the bargain bin. And you know, I think there's a lot of problems with the structure of the big box, you know, especially with Walmart, you know, stock I've also never really been a big fan of because, you know, people just don't have time to go to these big box retailers and then find what that they want is not there. And so you notice all these big box retailers have been pushing the online sales, but they really don't stack up to, of course, Amazon, which is a stock I have been buying.
This is a place you're putting your money. How long have you owned this stock, and are you adding to positions still?
Well, I got lucky and bought Amazon years ago during the financial crisis when it was much lower in the 80s for just a few clients here and there. But lately I've been buying it, you know, about $315, you know, right here, Angie. You know, they had a little bit of a disappointment with the earnings, but I think the trend is that online sales are the gargantuan thing. Amazon is the leader, and I think it's the real choice, the clear choice in retailing going forward.
That might be a bit pricey for some people in the $300 level, but you still say it's okay to go ahead and plunk some money down.
I think so. One of the things I like about Amazon is they actually spend and invest money. And, you know, a lot of times investors have been punishing companies that spend and invest instead of cut employees. So I like actually the fundamentals and what they're doing for the economy. I think it's a great trend, and I'm not saying put all your portfolio into it, but it's a good stock that I want to be in. And, you know, it's been up lately with this rebound from the correction we had.
Thanks for coming on the show, Matt.
You're welcome, Angie.
Coming up tomorrow, how one company is inhaling profits from the medical marijuana business. And on that high note, that's it for now. Have a terrific Tuesday.